So hello everybody and welcome to MD's Options Trading and welcome to this special series of sessions for option Greeks. In yesterday's session we have seen what is delta, and in this today's session we are going to see what is gamma. Now gamma is very much important Greek, especially for the traders, those who are trading for expiry day, and also for the people those who are trading in weekly options. For them also gamma is very much important Greek. In order to form any strategy, whether it could be for option buying or option selling, especially on the day of expiry, or it could be the positional weekly strategy as well, a trader cannot ignore the gamma impact, whether it is the option buying strategy or option selling strategy. But gamma is a second level derivative which is depending on the delta. So some of you people, if you are not watched my delta video, I would advise you to pause this particular video, go and watch the delta video first, try to understand what is delta, and then watch this gamma video, because in order to understand what is gamma, the prior knowledge of delta is required. Now, some of the traders, those who trade in long options, let's say some of the traders, they trade in quarterly options, 6 monthly options, yearly options, 2 yearly options. For them, gamma will not matter much. They need not to worry about the gamma. But especially for the people, those who are trading in expiries, because currently the expiry is scheduled from all days from Monday to Friday, and number of people, they trade only on expiries. For them gamma is the most important option Greek, and you cannot ignore the gamma impact. So in this session, so it could be a little bit lengthy session. I don't know how much time it will take to make this particular session. I will explain all the concept related to gamma, like what is gamma, how it is derived from delta, how gamma impact happens, and how a option buyer or seller can check the gamma impact while deriving the strategy. All the things we will see practically in this particular session. So let's go ahead. The market is going on. Today's date is 7th of May. So our first weekly expiry, it will be scheduled on 9th of May, around 2 days after now. And the monthly expiry, that will be conducted in May end. So market is going on. You can see over here, the current spot price is 22,300. So for calculation purpose, we consider that 22,000 is the spot price. So I can go over here. This is the software wherein we can learn the concepts of the gamma. I will go here and the strategy builder, and just like the delta session, I will select options over here, and I will select the 30th of May expiry, and I will click on option chain. Spot price is 22,311. So for calculation purpose, we can consider that 22,300. Now, for concept purpose, in order to understand the concept, first of all, let's assume that for entire session, I will be talking about the buyer's point of view. So I'm assuming that I have bought the option. So in buyer's perspective, I will be talking. And for the calculation purpose or for the concept purpose, let's talk about the call options. The same concepts are applicable for put options as well, so that you can try as a homework part. So you can consider over here what is 22,300. I will write it down over here. I'll give you the heading as the spot is at 22,300, and I'm going to write like 22,300, 22,200, 22,100, and let's say 22,000. I'm writing it for the call side. Okay, here I will write it down there LTP respectively, and here I will write down there respective delta. So 22,300, you check over here, 22,300, its value is 382 and delta is 56. 382, 382, the delta is 56. Then next one, 22,200. 200, its value is 442 and 61 is the delta. Value it was 442 and 61. 442 and 61. Of course, this is not required. LTP for other strike prices, that is not required. Even if we copy only the delta part, that is sufficient to understand the concept. Then 21,100 and 22,000. 21,100, this is 65. The delta is 65 for 21,100, and for 22,000 that is close to 70. So 65 and 70, I may note down. 65 and 70. Now assume that I have bought this 22,300, that is at the money call option. This is all at the CE side. So my assumption is that I have bought 22,300 at 382 and its delta is 56. Assume that market goes 300 points up by tomorrow. What I'm saying you, I'm assuming that market is going 300 points up tomorrow. So what will happen if once I'm talking only about this 22,300 CE, the 22,300 CE. I'm talking about this over here. When the market is at 22,300, then 22,400, then 500, and last 600. At present, currently its value is how much? It's the value 382. Again listen it carefully. Currently market is at 22,300. I have bought 22,300 call option at the price of 382. And I am assuming that market is going from 300 to 400, 500 and 600. Its delta is 56. So according to the delta calculation, what we talked yesterday, I will open calculator over here. So what we had talked in delta calculation, my price, it will go to 382 plus 56. It will become 438. It will become 438 once the market goes to 22,400. For calculation purpose or for concept purpose, I am assuming that all other option Greeks, they are not operating, they are inactive, so that we can understand the concept of delta first and then gamma. So as of now, think that the theta is not working, vega is not working, rho is not working. So all other option Greeks, they are inactive. So what will happen if the Nifty goes to 22,500? So what I will add 56 in this. So it will become 494 over here. 494 over here. And lastly, once it becomes 22,600, so I am again adding 56 in this value, it will become 550. It will become 550. So this is what a simple calculation we had made yesterday. Like whenever Nifty will go up by 100 points, every time my option price, it will increase by 56 rupees, and eventually at 22,600 its price will become 550 rupees. But generally the value of delta, it does not increase linearly. Okay, it increases non-linearly, and that non-linearly is denoted by gamma. Why? Before talking about this concept, let me give you one example. Whatever we had studied in our physics in our school days. If you are going by a vehicle, then what is the speed of that vehicle? Speed of the vehicle is nothing but the distance traveled in a specific amount of time. So whatever distance my vehicle it has traveled in a specific amount of time, that is called as the speed of the vehicle, or you can say velocity of the vehicle. Now let's say for example, if consistently the speed of my vehicle is increasing, consistently the speed of my vehicle is increasing, then that is called as the acceleration. So the rate of change of velocity is called as the acceleration. Similarly over here, the delta, it will tell you how much my option premium it will change, that is increase or decrease whenever my underlying it will change. And gamma, it will change you how frequently or how fast my delta will change, that is denoted by gamma. Now if you think it properly, if you look over here, I'll show you. Currently the spot is at 22,300. So my delta is near to 50. Why near to 50? That is what I said in the deltas class. Generally for at the money option, the delta is near to 50 because my winning probability is around 50. So whenever Nifty will go up by 100 points, try to imagine this part. Whenever Nifty will go here, that is 22,400 over here, then my bought call option, that is 22,300, it has become in the money. Now it has not become at the money. Earlier when I bought, then that was at the money. Now when Nifty has gone up by 100 points, now 22,300, that is not at the money, that has become in the money. As it has become in the money, my probability of winning it will increase, right? So when my probability of winning it will increase, naturally my delta will increase, because delta it shows the probability of winning. So naturally my delta it will become 61 over here. So my delta it will not become static, it will become 61 over here. So in the first calculation it is right, whenever Nifty will go up by 100 points, my the option price it will become 438. That's right. But whenever again Nifty will go up by 100 points, whenever it will become 400 to 500, no, at that time I am not supposed to consider delta to be 56. I need to consider the delta to be 61, because now my strike price, that is 22,300, it has become in the money. So for calculation, what I need to consider, that I need to add 438. I need to add 438 over here, 438 plus I need to add this delta of 61, and it will become 499, and it will become 499. In earlier calculation, I was considering it 494, but it has become 499. Again, whenever my Nifty will go up by 200 points, whenever it will go up by 200 points, again my bought strike price it will become deep in the money. So again its delta will change. So its delta will change to 65. It will not be 61 again. So here I need to add, for next calculation I need to add 65 over here. So this is 499 plus 65, it will become 564. It will become 564. 564. So in earlier calculation, I was thinking whenever Nifty will go up by 300 points, my option premium it will become 550, but rather it has become 564, and this difference is of 14 points. No, the difference is of 14 points. This is called as the gamma impact. This is called as the gamma effect. Now, this gamma impact is little bit less for the monthly expiry. It is very less for yearly. It is again less for 6 monthly, again less for quarterly, again less for monthly. But that is very high for, you can say, weekly expiry. And that is again high or at the peak on the day of expiry. So as we are coming closer to the expiry, the gamma impact is higher. So here we can see only 14-point gamma impact because our expiry is little bit longer. That is May expiry we have selected. This is the first thing. And second thing, for calculation purpose, I assume that my delta will change after every 100 points. Try to imagine this point. This can be a little bit complicated, but for calculation purpose or convenience purpose, I have assumed that my delta will change after every 100 points. So I have considered the change in delta only when Nifty is going up by 100 points. But in actual or in practical, the delta, it will change not after every 100 points. It will be changing after every a single point or even half of the point. So whenever currently Nifty is at 22,300, so 22,300 is my at the money. Whenever Nifty will go, let's say up by 10 points, so it will go from 22,300 to 22,310. Immediately there itself my delta, it will change from 56 to, I would say 56 from 5, 56.6. So for every point change in Nifty, no, delta is keep on changing. Only for convenience purpose, I have considered that delta is changing after every 100 points. So we got this gamma impact only of the 14 points. So if you look thoroughly, if you consider for every point change in Nifty, my delta will change. If you consider in that particular perspective, no, this 14 point, it will go up to 30-35 points minimum for May series. And if you consider for the recent expiry, which will be scheduled on 9th of May, the gamma impact will be even more. Okay, so this is the basic concept of the delta, not delta, of the gamma, because the delta, it is not the change in delta is not linear. This is non-linear, or you can say exponential. And this difference, whatever this difference you are seeing in this particular calculation, that is called as the gamma impact. Now I'll show you another thing. I'll show you it briefly, like how the things they will happen. So I will open the Excel sheet over here. Just focus and try to understand whatever I am saying to you. Now what I said, I will write it down, heading over here. Just sit, relax and try to understand the thing. Alignment, merge cell. I will take left indent over here, and I would say that Nifty spot is 22,300 and the date is 7th of May. Date is 7th May. Now what I will do, I will write it down for all the expiries. First of all, I will write it down for 9th of May expiry. Then I will write it down for 30th of May, that is May expiry, yearly contract. And then I will write it down for June expiry, so that you will understand the concept of gamma even more deeply. So this is 9th of May expiry, this is June expiry, May expiry, this is 9th of May expiry. And what I will write it down, I will write it down delta and LTP for 22,300, 22,200, 22,100 and lastly 22,000. I will write it down LTP over here and I will write delta over here. Similarly, these things I will copy for this column and this column, and we will write down all these things slowly one by one. I am opening 9th of May. First of all, option chain, I will refresh and quickly I will write it down only for the call side, and the same things they will be applicable for the put side. So 22,300, if you see over here, delta is 47 and LTP is 112. 112 is the LTP and delta is 47. I am taking it round number. 22,200, delta is 60. Delta is 60 and LTP is 166, 166, 21 100, delta is 71, delta is 71, and this is 234, 234. This is the column of delta, this is the call delta, and this is LTP. And 22,000, this is 80.38, this is around 80. And what is the LTP over here? That is 313, 313. The same things I will write it down for May expiry. I'll select 30th of May over here, and I will get the option chain. 22,300, this is 53, delta is 53, or it was 54 rather, 53.89, and LTP is 359, LTP is 359. Then 22,200, this is 58.66, so I may write it down 59, and LTP is 470. 22,100, 63 is the delta, and LTP is 483. And last one, 22,000, 67 is the delta, and LTP is 549, 549. And for June expiry, I'm selecting June expiry here, 27th of June, and again I'm writing down all the things. 22,300, delta is close to 55, delta is close to 55, LTP is 729 or 730, you can say 30. Then 22,200, delta is 58, 58, LTP is 786, 786. Then 22,100, delta is close to 60, delta is 60, and LTP is 850. And lastly, 20,000, 20,000, delta is 62, or I can say 63 also, delta is 63, and LTP is 919, 919. So these are the, what you can say, the data points we are available, which are available with us. The currently spot price is 22,300. Now if you see over here, can you see the huge difference for the 9th of May expiry, which is very near? At the money, delta is 47. Then 100 points in the money, delta is 60. Then 71 and 80 over here. Whereas for May expiry, at the money, delta is 54, which is higher than this, which is higher than 47. But in the money, no, there is not much difference in delta. You can follow these numbers, how these numbers are increasing and how these numbers are increasing. Difference is there, and this difference has again gone down for June expiry. That is 55 over here, which is higher than 54, which is higher than 47. This is 55, and change in delta, it is 59 from 54 to 59, and it is 58, 60 and 63. This is, if you go for again other further expiry like December expiry, you will see the very minimum change in delta for all these strike prices if you go ahead. So this is now the things are working. Now assume that the Nifty goes up by 300 points. I will write here again. I will merge these three cells. I'm having, so relax, listen to these concepts. Left indent, merge cell. I'm assuming that, assume Nifty goes up by 300 points. And immediately, like tomorrow, Nifty goes up by 300 points. And I'm assuming that all other option Greeks, they are inactive. So again, I'm assuming that I have bought. I'll write it down over here. I have bought 22,300 CE in all expiries. In all the expiries. So what will be its value? Its value, then I will write it down over here, 22,300 CE value at the end. What should be its value? Let's check over here. Its initial value is 111 plus once it will go up by 100 point, it will increase by 47 point. So I will write it down 47 over here. This will be its value. When it will go up by again 100 point, then it will increase by 60 points. So plus 60. And lastly, it will go up by again 100 points. It will increase by 71. So it will become 290. So it will become 290. Right? It's a simple calculation. If I come to this particular line, let's do the calculation here. Its initial value is 359. For first 100 points, it will increase by 54 points. For next 100 points, it will increase by 59 points. And for another 100 points, it will increase by 63 points. And its value, it will be 535. Its value will be 535. And for the June expiry, again, we will do the calculation. Its initial value is 730. Once Nifty will go up by 100 points, it will increase by 55. Plus, next time it will increase by 58. This 58 over here. And lastly, it will increase by 60 points. So its value, it will become 903. It will become 903. Roughly, I'm talking about these things. Now, if you have seen properly, if you have looked over here, how much is the difference? How much is the difference? I will write it down. The difference in percentage. I write it down, difference in percentage. Here, I bought it at 112. So this is 3. What is the value? 290. Minus my buying price was 112 divided by 112 multiplied by 100. So this has increased by 58.92%, or I would say 59%. Difference, this is 159%. 159%. Okay. Then here, what is this difference? 535. 535. This is the final value. Minus 359 divided by 359 multiplied by 100. So it has increased by 49%. How much it has increased? 49%. And if you look for this last number, 903 minus 730, this 730 at the price at which I bought, divided by 730, because that was my buying price, multiplied by 100. This is close to 23%. 23%. Now, here is the exact gamma impact. In the first case, whenever Nifty went up by 300 points, I got 159% extra. The second case, for May expiry, I got only 49% extra. And in the third case, I got 23% extra. That's why, as I'm closer to the expiry, just try to imagine this thing, just try to understand this thing. As I'm closer to the expiry, gamma impact is high. And as my expiry is far away, let's say 2 months, 3 months, 6 months, 1 year, the gamma impact, it will be very low. Even if we consider that all other what you can say Greeks like the theta, vega, they are not working, even in that case now the gamma impact will be very high on the day of expiry or near to the expiry. So lower the option price, you try to understand this thing, lower the option price, lower the option price, higher is the gamma impact. Listen it carefully. Lower the option price, higher is the gamma impact. Lower is the time duration for expiry, higher is the gamma impact. Another thing, lower is the India VIX. Now, what is meant by the India VIX? We are not studied yet, but all the things, they are interrelated with each other. Lower is the IV, lower is the India VIX, lower are the option premiums. So even if some spike in Nifty, little bit spike in Nifty, no, it will give highest gamma impact. That's why if you are trading in the market since last, I would say 3 years or 4 years, you might have observed in 2022, that is 2 years back, VIX was very high. VIX was trading near to 20, 22, 25. So the option premiums were higher. Last year in 23, especially in last 3-4 months of 23, the VIX was gone down to 11 or 12. So the option premiums were very less. So the people, those who are traded in 22 and 23, they can immediately correlate these things. In 22 also, the market was moving violently on the day of expiry, but gamma impact was not much. But in 23, the gamma impact was, it was superb. The reason being, VIX was low, option premiums were low. So whenever, even if I would say 50 to 100 points of spike comes in Nifty on the day of expiry, immediately that gamma impact happens. And immediately within no time, the option which is trading at 5 rupees or 6 rupees, it shoots to 70 rupees or 80 rupees. This has happened quite frequently in 23 and in 24 as well, because VIX is low. But this thing has not happened that much frequently in 22, because the VIX was higher, option premiums were higher. As option premiums are higher, other factors like theta decay also acts very much on option premium. So the, you can say the option premium shooting up did not happen that much in 22. This is the theoretical concept or the important concept. In order to explain this gamma impact even more practically, I would like to show you one backtest so that you will understand this concept very well. Now, till now, whatever we have discussed from the call perspective. So for in practical perspective, while talking, we will discuss about the put perspective. So I will take you to one of the expiry which I had traded. So I'll go to this Nifty chart here, and directly I will go to 16th of June 22. I'll show you 22. I will select, and I will select June 22 and 16th. Go to, see, you can see this big red candle on 16th of June, and this was the Thursday. This was the expiry of Nifty on 16th of June, and on the day of expiry it was a big red candle. And how the gamma impact works, I will show you this practically. So let's go to options simulator, and I will show you how the things had worked. I select Nifty, I will select 16th of June 22. 16th of June 22. Payoff date, I will select the same 22, 16th of June, and I will select again the same expiry 16th of June. I will go 5 minutes later, so I will start my trade somewhere at 9:20. I will select get option chain. Currently the spot price is 15,845. The spot price is 15,845. Take yourself on 16th of June 22. This is what I selected. 16 June 22, it's a Thursday. Payoff date is same. This is the expiry day, and this I selected as expiry. Now assume that I had bought 15,500. I'm not talking about profit and loss over here. I'm not talking about any strategy. I'm not talking about profit and loss. I just want to show you how gamma impacts. That is what I want to show. Assume that I had bought 15,500 call. So assume that I have bought 15,500 put, not call, put. This is what I had bought. So come over here. I had bought 15,500 only rupees 2 and 2 rupees 30 paisa. If you check the Greeks, its delta is only 3.12. Forget about that minus sign. This is showing minus because I have bought the put. If you consider the absolute value, this is 3.12, or calculation purpose consider 3 rupees. So what does this only definition of delta, if you do not consider gamma, what does this definition of delta tells you? Whenever Nifty will go down by 100 points, by this put option, it will increase by 3 rupees. It's quite simple. Whenever Nifty it will go down by 100 points, this put option, it will increase by 3 rupees. So ideally, whatever I have bought it at 2 rupees, it should become somewhere near to 5 rupees whenever Nifty will fall by 100 points. Then it will become 8 rupees whenever Nifty will fall by 200 points. And it should become 11 rupees when Nifty will fall by 300 points, and so on. If I am considering only the delta impact and not the gamma impact. Now what I will do, on the same day, I will buy for July expiry as well. On the same day, I have bought it for July expiry, get option chain, same strike price, that is 15,500 at 281 rupees. And on the same day, I will buy for December expiry also, December 22, so that you will understand all these concepts very well. I am buying 15,500. This is what I have bought. So what I have done, I have kept the strike price same. For today's expiry, I have bought 15,500 put. For expiry which will be there at 1.5 months from now, I have bought 15,500 put. And for 6 monthly expiry, I have bought 15,500 put. These are my buying prices. 2.3, 281, 642. If you look at the Greeks, the delta, why it has changed? Okay, fine, forget about it. The delta it is showing at 0.53, so somewhere there could be some problem in the software, but let's forget that and let's focus in the concept. Its delta is 0.53, this is 37, this is 41. Forget about the minus sign. Why this is minus? Because I have bought the put. The simple calculation, whenever Nifty will go down by 100 points, this will increase by, I would say, 53 paisa, or I would say zero point 0.5 rupees. Whenever Nifty will go down by 100 points, this will increase by 37. And Nifty will go down by 100 points, this will increase by 41 rupees or 41 points. This is a simple calculation. I will write it down, this basic delta here in this Excel. The basic delta, I will write it down, the expiry. I write it down today. Then I will write down to 1.5 months and write it down 6 months. These are the expiry. And I will write it down delta. How much delta they have shown? Here 0.53. I don't know why it's showing 0.53. Earlier it was showing 3, but okay, no problem. I will write it down 0.53. I'm just writing the absolute value, not negative. Then where it has gone? It is 37. And for 6 monthly, this is 41.48, or 41 you can write down. 41. Delta I will say over here, delta in the morning, and I will write it down here, the delta evening, so that you will identify all the difference. Now what I will do, I will take this 30 minutes ahead, like the 15,850 is the value. I will take it 30 minutes ahead. Market has started to coming down, and I will directly take to at the end of the day, because we know that the market has fallen. You look at the spot price, now it has become 15,458. Market has fallen like anything. 15,365, 15,350. This is 15,340. So market has fallen down, I guess, by 500 points. And if you look over here now, currently the market has gone down. Greeks, see, look here. For the current week expiry, the VIX has gone to 100 delta in the evening. From 0.53, it has increased to 100. Here, it has become only 53. It has become only 53. And for 6 monthly, it has become 49. 49. So can we believe, in the morning its delta was hardly 0.53. It has gone to 100 on the day of expiry. Its delta was 37. It has gone to only 53. And from 41, it has gone to only 49. So how the delta is changing for the current week. And again, if you check at the profit and loss, the option which I had bought at 2 rupees, it has shooted to 138, and this option from 281 to 531 and 642 to 900 rupees. Now if you check properly how much increase this has increased, that is 138, I will take a round figure, minus 2.3 divided by 2.3 multiplied by 100. So how much percentage it has increased? It has increased by 5,900 percentage. How much? 5,900 percentage. And how much this has increased? This has increased from 900 minus 642 divided by 642 multiplied by 100. So in one day, the December option for the same movement of Nifty has moved same. I have taken the position at the same time. For December expiry, the option has increased only by 40%. But for today's expiry, the option has increased by 5,900 percentage or 6,000 percentage. And you can look how much profit. Almost it has given almost same profit or little bit less profit. From 2 rupees it has shooted to 138. Why it has shooted? And Greek also immediately from it has gone to 100. Why? Whenever Nifty started falling down, immediately fastly it delta started shifting from immediately it shifted from earlier it was 0.5. This shifted for current. I would write it down current. Then I would say 1.5 month. And I would say 6 month. Immediately from 0.5 it started to 0.6, then 1, 1.5, 2, then I would say 10, and it went to 100. And this, I don't remember what was the number which we had written over here, 37 and 41. And this one, 37 and 41. Slowly it become 37.1, 37.2, and so on. Here 41.1, 41.15, and so on. And this is called as the gamma impact. And this is the gamma. So that's it for now. I think you must have enjoyed this session for the gamma. For some of the newcomers, this could be bit complicated, but I would advise you to watch delta first, then gamma, then watch theta and vega, then again watch gamma, because all these Greeks know they are interlinked with each other. They are tightly coupled, so they are not loosely coupled. So again, the theta, it will impact gamma, it will impact theta. So all these things, they are interlinked with each other. So I would advise you to watch this series once. So once you have understood all the Greeks, again watch the series so that you can understand the connection between all the Greeks. and that will be easy for you to derive the strategy. So thank you and have a nice time and happy trading. Thank you.